I'm Charlotte McLeod with the Investing News Network, and here today with me is Jordan Roy-Byrne, editor and publisher at The Daily Gold. Thank you so much for joining me. Great to see you.
Oh, thank you so much for having me, Charlotte. It's a pleasure.
Really excited to be speaking with you. And since it is our first time talking, I wanted to begin by asking where you see gold in the current cycle. I think it's a pretty good question because it's getting a little bit confusing with the metal near its all-time high right now.
Yeah, it's a really good question. And talking about the cycle, there are a lot of people who say that, well, this new secular bull market in gold began at the 2015 low. But I don't think that's correct, because in a secular bull market, the market that you're talking about, it really needs to make higher highs consistently, and then it needs to make a new all-time high. So in secular bull markets, you see, unless something is completely bombed out, then it can take a while for it to make a new all-time high, like gold was in the early 2000s. But given where we are here and now and where gold was in 2015, 2016, if the secular bull began then gold would have already blasted through 2000, 2100. It also, I would say, when gold is in a secular bull market, the stock market specifically is in a secular bear. So even though gold has performed well since 2015, 2016, the problem is since then, U.S. bonds have moved higher. You've made money. Until recently, you made money at bonds. The 40-year bull that everybody talks about. The stock market has still been in a secular bull. So when you look at those things, they tell you that gold is not, at least, until very recently, we could say, well, gold is not yet in a secular bull. And when you see a market make a multi-decade breakout and, break out past that kind of resistance, make new all-time highs, which gold is, we came within like a hair of doing that last week. So gold is on the cusp of doing that. I think when that happens, it's almost 100% confirmed gold is in a new secular bull. So I think it's very exciting. I'd compare it to the late 60s, early 70s, in that the move that gold and precious metals in general will be starting or have already started, if you go back to last year, it's on the cusp of a new secular bull market. And one additional point about why in the last 5 or 6 years we weren't in a secular bull, just look at silver and look at the gold and silver stocks. They recovered with gold, but they're still completely bombed out. They've been underperforming gold generally. So that's not a characteristic of a secular bull. So the cycle that we're in now, we are at a fascinating, just an incredible point, because gold, once it can take out 2100 and really start to move, regardless of whether that happens in a day or two or a month or two, or it takes 3, 4, 5, 6 months, we are starting what I think is going to be the most significant move in this sector and industry in the last 50 years. It's an extremely exciting point in time that we're at.
It is really exciting, and I think that helps us situate kind of where we're at with gold right now. One of the things that caught my attention about your work is you're laying out timeframes where we could see gold make particular moves. And one of those is $4,000 gold by 2025, which would basically double the price of where we are today. So I wondered if you could lay out how you see us getting to that point.
Well, there's a couple of reasons for that. First of all, gold is in a very bullish cup and handle pattern. And aside from it being a cup and handle pattern, you go back to the last peak in 2011. And yes, gold made a new high in 2020, but from there, it's corrected 2.5 years. So, because gold essentially hasn't had that breakout. And it's been 12 years since it's really surpassed that high. And so when you look at markets like gold in the stock market and other markets, when they have these breakouts, when they break past 10, 15, 12, 13-year resistance, they give way to new secular moves, and they're really, really bullish. And so cup and handles, you don't tend to see, they tend to be, like at a 1-year chart or 6-month chart. You tend to see them a lot on those timeframes. They're very rare in, a 10, 15-year time frame like the one we're in now. A couple of comparable ones, Hong Kong, the Hang Seng, their market in the 70s and 80s wasn't as clean of a cup and handle as this one is, but that market broke out, I think, in the early 80s, and then it just went crazy for the next couple of years. You had the 87 crash, then it kept running after that. So that, I mean, that gave way to a real strong period of performance. Same thing with the stock market, 1937 to 1950, a similar cup and handle pattern. Stock market had a great breakout, and from 49 to 57 was probably the best 8-year period for stocks ever, because during that period of time, you had this very clean, stable uptrend. And I think there was only one downturn of 23, 25%. So these types of patterns, I mean, you can, there's a simple measured upside target where you take the depth of the cup, then you add it to the top, and that gets us around 3,000. I mean, if some people are saying 2,800, 2,900, I mean, that's where they're getting those targets from. But if you also take the depth of the cup as a percentage, and then you apply that depending on which levels you pick, because the cup and handle is not perfectly clean. I mean, you could have anywhere from 3,750 to 4,100. When you say 4,000, like I've been saying, it gets a lot of attention. So that's why I'm saying 4,000. But now those other two cup and handles that I mentioned, they hit the first target, the measured upside, which would be 3,000 for gold. And then in 6 to 12 months, they went to the next target, the long target, which is like the percentage target. So based on that, you could say, gold, if it hits 3,000, it could hit 4,000 sooner than we think. And not to belabor the point, but there's another important reason why I think this is possible. If you look at gold historically, one thing I like to do on charts is just run a rate of change at the bottom. I'll plug in 2 years or 3 years or 2.5 years. They can look and see, okay, well, there's been a handful of times gold has doubled in 2.5 years, or, it's gone up 150% in 3 or 3.5 years. And if you look at, I think a 2.5-year period, gold, even in the 2000s bull market, so we're not talking about the 70s, which is really crazy. Even in the 2000s bull market, gold doubled, or I think it came very close to doing so within a 2.5-year period. So taking the low from last year and, doubling that low puts us, I think, pretty close to 3,300. But I mean, there's certain, I don't have the charts in front of me, but basically, making this projection that gold can hit, it can go from that low to hit 4,000, which would be about a 3-year period from that low in October 22 to October 25, because I've said 4,025. Based on historical performance from the 2000s, it's really not that crazy of a prediction. And so if people think that, and they're saying, the gold bugs are saying gold's going to 10,000, 8,000, 9,000, 20,000, whatever, we have the setup now where the next couple of years, like this is the time where it really, if that's going to happen, then it's probably going to start based on the move that's just starting right now.
All right. So 4,000 by 2025, I think you're totally right. People like to see those big round numbers. People also, I think, would be curious to know what you see coming in 2023, because that's a more short-term specific time period for gold.
Well, I think right now in the short term, I mean, gold technically it's gotten really overbought. The stocks have gotten really overbought. But like I said earlier, whether gold corrects for a little while or it takes 3 or 4 or 5 months from now, I think it's setting up where it's going to blast through 2,100 and then really run. On the fundamental side, the Federal Reserve is coming to the end of hiking interest rates, and the market has been sniffing that out. I mean, in the last couple of days, there's some indications that, and maybe, some inflation statistics are not dropping as much as they would like, but the real setup for gold is, it might take a little time to get there, but the real setup is the economy is going to fall into recession at some point. I would probably say somewhere around, sometime in the third quarter. Maybe it's a little sooner, maybe it's a little after. But when that happens, I think the issue is you're not going to see inflation fall all the way down to 1 or 2%, or they want to get it to go. Maybe it comes down to 3 or 4%. But in the economy in a recession, in that scenario, people are, and I think it's already starting to change the sentiment, people are getting more concerned with growth now, even though inflation is still, whatever the stats are, it's still a problem and hasn't come down. So the major point, which I'm dancing around, is we're going to get to a point, the Fed is, where they have no choice, but they're going to have to cut interest rates and ease policy when inflation is not all the way back down to 1 or 2%. So if they're easing policy when inflation is at 4% or 3.5%, and they have to, print money in that situation, that's just super bullish for gold. And that aligns technically with where the market is, because we're technically in a point where the market can really explode. So when the Fed is forced to do that, I think the market is already starting to sniff that out. But when it actually happens, that's why gold is really going to fly, because it's a situation where it's just, okay, we have to pick the lesser of two evils. We don't want to go into a depression. We're just going to have to cut rates and print money, and inflation's going to go up, and we're just going to have to deal with it.
Great. And that leads into a question that I wanted to ask you, which is, you're clearly very focused on charts, technical analysis. How or to what extent do you weigh things like the Fed, interest rates, inflation into your analysis when you're looking at the price of gold and things like that?
Well, I weigh those things a lot into my analysis. And I mean, to be a good analyst, or at least have an understanding or a handle on where the market can move, why it's moving, you have to understand what are the fundamentals driving it. And then you also have to look at the technicals. And so when you get the two are in alignment, they're both telling you something is really bullish, then you have a good handle on what might happen. It's when you're, when they're kind of out of sorts, and you have a fundamental viewpoint that, gold is going to crash, and we're going to see this huge move down, and you're looking at the technicals, and, the technicals show you this is the most bullish setup ever, basically, for gold technically. And so the market is sniffing out something. And so you have to get a handle on fundamentally, where are real interest rates going? Because gold, I mean, it typically follows, it's inversely correlated to real interest rates. And so, I think, like I was saying before, I think fundamentally we're moving towards a situation where certainly the Fed will have to cut and real interest rates will go down, which is good for gold. And inflation is still, too high, even at 3.5 or 4%. And so that's also good for gold. When you get that, you kind of get that stagflationary situation. And a lot of people were calling for that last year or the year before. But, gold really needs the other asset classes to do poorly or really struggle to do well. And so in 2021, inflation was really high, and it looked like we had stagflation, but employment was still high. The economy was still growing. And so that's not stagflation. Stagflation is when you have high inflation, the economy is really struggling, and, people are getting fired, unfortunately. So you have to look at all these things and kind of match them with the technical. So I am, even though, charts is my bread and butter, I'm definitely not someone who's only going to look at the charts and say, I don't care about fundamentals. You really have to put the two together to have a better understanding of what's going on and the probabilities of what might be coming.
I think that makes total sense. So thanks for explaining how you think about that. I think it's really helpful. One thing I wanted to talk about is, of course, as you're outlining, there's this really bullish setup for gold, and I think there is excitement building in the market. But people are also a little bit hesitant, I think. They may have been hurt by gold before. They've seen it above 2000 and it's fallen back. And they're not sure whether to believe that this is really the time that we break that high and we go much higher. So what would you say to those people? I mean, is there anything that would throw gold off the track that you see it on right now?
I think it's a timing issue. I mean, the thing that could throw gold off the track, and I would say push the breakout further out, is if, let's say, the Fed is able to hike, I don't know, a couple more times, and they're able to get to 6%. Maybe the economy is still growing a tiny bit, and, unemployment is not quite rising yet. So if what we've kind of been seeing, I mean, if these issues persist and the economy just kind of, hangs around or hangs at the current level without falling into recession, if that would happen, I think, and let's say that lasts into the end of the year, I think that's a scenario where you would see gold would probably correct and consolidate a while from here. I don't know. Maybe it would fall into the 1800s. I don't agree with the scenario that everything's going to crash and you're going to have this deflationary crash. I don't see that happening. I mean, that's a whole another interview. But I will say people are scarred. I mean, I call it the 2008 boogie. Everybody is worried about this, and nobody thinks of in 2001, 2002, in that scenario where, we had this big tech bubble, a valuation bubble. It was a drawn out bear market. Gold was coming off the bottom. Other commodities were going up. So there's a lot of similarities to '01 and '02. And so I would encourage people to go look at what happened when the stock market really fell in those years and how precious metals performed. I think that kind of I think what we might see coming up is going to be more similar to that and not 2008. And, also a lot of people are looking for this big move down, but let's just go back a year ago. And gold was down 20% in 5 months. The GDX was down 50% in 5 months. The junior's much worse. So everybody's worried about this big move down. But I mean, my view is, look, this already happened. It happened a year ago. And so people are and if you look at some sentiment indicators, there's not too bullish of sentiment in the market right now because of your question. Because people are scarred. They've lost a lot of money in juniors, and they don't think it can happen. And I mean, those things happening, they kind of precede, a major breakout in a new secular bull market. And so everybody now knows that gold stocks are bad. Basically, they're terrible. They're a bad investment. But they're setting the stage for a next decade, which is going to be fabulous for gold stocks. They're going to make an epic run because you're going to see gold have this huge breakout and run much, much higher. And, the margins of these companies are going to expand in the next couple of years at a record rate that we haven't seen in 50 plus years, probably. So I love the sentiment that we're seeing right now. It's almost a perfect backdrop technically, and you throw in this sentiment. But as far as technically, I can't tell you if it's going to happen in 6 months or 1 week or 2 weeks. But just big picture, I think over the coming months, I mean, we're setting up for that huge breakout. And what people have to understand about the technicals, the setup is there for this huge move over the next couple of years. I mean, you get these big moves when either, a market crashes or you're coming out of a bad bear market and things are down 50, 70%, and they're just really oversold. That's a setup where you can see huge gains. The other setup is when a market has been consolidating for a while or it's about to break past 10, 12, 13-year resistance. Those are the setups that give way to these huge moves. And so that's what people have to understand. Like, the odds of this sector making a really huge move are really high right now. They're the highest they've been in decades.
Okay, I'm going to come back to gold stocks for sure before we finish this interview, but I have one more question on gold that I want to ask you, and it relates to how you're talking about this potential move back down that people seem to expect. I think it is getting confusing for people right now to know when they might want to buy, because you always hear, don't buy high, but we're in this scenario where gold is pretty close to its all-time high, but also potentially poised to move much higher. So any thoughts on what we're seeing there and advice for people on how to navigate that?
Well, I mean, I would say, if you're talking about buying gold and silver, I think dollar cost averaging works really well. Even as a technical person, you're never going to buy at the bottom or sell at the top. Nobody can do that. And there might be 5 or 10 people in the world that can do that, and that's why they make billions of dollars. I mean, the rest of us mortals, we just have to use proper risk tolerance and follow our own proper rules, or we try and use common sense. And so I think with the metals, I think dollar cost averaging really works best. If you're looking at individual stocks, focus on the company, because there's some companies that might, if you're looking at the chart of those companies and it's like a rhino horn that's gone straight up, there's more risk. You don't want to buy those right now. You want to look for things that are fundamentally sound, but maybe their stocks haven't performed that well and they're showing some weakness. You have to be careful because you have to make sure that they're not weak because there's a huge fundamental change there. But, if you're looking at these stocks, assess an individual company by its fundamentals and try and buy the ones that are not overextended. And at the same time, you can also do the same thing with stocks. If you're unsure, you can say, well, I'm going to buy 1/3 right now. I'll wait a couple weeks and, then I'll buy the other third if it goes lower. If everything breaks out and starts running, I'm going to buy another third at that point. So, You have to do it in these types of ways because, like I said, nobody has a crystal ball. Nobody can see in the future, even though a lot of people on Twitter will tell you they can. But so you have to follow a plan, and so I think dollar cost averaging or with stocks, if you're buying in 2 or 3 tranches, that's going to work best.
I think that makes total sense as a strategy. So thanks for going through that. Touching a little bit more now on the gold and silver stocks. So in your writing, you said you want to be looking right now at gold and silver juniors with 500% upside potential over the next years. So I wonder if you could go into your selection process there, the criteria that you like to see among these companies, because that can be very, very tricky for people to try to determine winners.
Yeah, great question. I mean, for me, in the last 20 years or so, I've always made the most money with, I would say, silver companies or looking at gold companies, the smaller companies that have huge production growth potential. And so, but I was just in my premium update in the last weekend, I was just going over, okay, if I'm right about the market, where will these stocks go? And some of these companies that have, high margin lines that can go from producing 100,000 to 2 or 300,000 ounces a year in the next 2 or 3 years. I mean, they're just going to be generating staggering cash flow. So I look for the small producers that really have a chance to grow their production significantly over the next 2 or 3 years. That could also include developers that are going to build the line if they're close enough to building. I like those as well. Silver stocks just have, because if you're in a real bull market and gold's going to make this run to 4,000, like I'm predicting, the silver is going to do better than that most likely, and so the silver stocks will be leveraged even more. And so I think with silver stocks, there's not a whole lot of producers I like there, but I think smaller. Well, this goes for gold stocks as well. On the exploration side, if you can find small exploration companies that have potential to discover or define or increase or enhance what they already have. They're trying to they might have a little bit of a deposit. They're trying to see if they can make it really big, see if they can add more value to it. Those are the types of situations I'm looking for. And it's tough because you want to find, at least what I try to look for is the juniors that they're small enough that their market caps are not, 3, 4, 500 million already. But at the same time, they have to be big enough in that they already have a project, or maybe there's some ounces there, there's already good results. So that there's some value already attached to it. And so it has to fit those two criteria. And then the third one, which is the hardest, which is, nobody can predict, is trying to figure out, if you have a really good deposit that maybe has 1 million or 1.2 million ounces, can they take that to 3 million or 4 million? It's really, really hard to try and find those. But I try and do that with the exploration, with the silver stocks and the gold stocks. So I look at those, and then also the small companies that have production growth potential. Maybe they can go from 100,000 to 200,000 or 300,000 or 50,000 to 150 or 200. And 2 more things. I'll try and be quick. The junior producers that they're not only are they growing production, but at the same time they're reinvesting back into exploration, trying to make a huge discovery. I mean, everybody remembers Kirkland Lake and its predecessors, how they were producing and they made this huge world-class discovery. And so the stock went through the roof. And so that's another way to play exploration, is look for the producers that are trying to make that huge discovery. And because if they do, it's almost free money, because maybe they already have a mill there. And so if they make this huge discovery, they can just, mine that and throw it in the mill, and they don't have to build a whole new line and plant and all those types of things. So there's that. And then I would avoid, development companies that they're not going to build the line. Even if a lot of them are decent, they'll probably be acquired, but you're not going to make 3x or 5x or 10x on those types of companies. Unless they're really, the value there really has to be outstanding. So Focus on exploration in the junior producers with production growth potential. Avoid developers that are not going to build the line.
Okay, I like that you threw in what to avoid as well. I think that's definitely useful. Before I let you go, I want to throw in a question about silver because we kind of been alluding to what could happen to the silver price in the event that gold does go all the way up to 4,000 as you're projecting. So we know that silver tends to outperform. So what does the path forward look like for silver?
Well, if I'm right about the 4,000 prediction, the path forward for silver is going to be nuts, basically. And also because if gold's going to have this secular over the next 10, 15 years, it's not only going to go to 4 or 5,000, it's going to go much, much higher than that. But, we can worry about that at, 3 or 4 years when gold's at 4,000 or 5,000. Eventually in the next decade or so, it could be nuts the levels that silver gets to, because when silver gets above 50, technically it's going to blow the roof off. Like it's going to probably go to 100 much sooner than people think. So you're going to see these real nutty moves in silver. Gold typically leads. And one thing I'm studying and looking at, I haven't finished it, but I'm looking at the times when gold makes a really big breakout. How does silver perform? And it looks to me like those are the absolute biggest moves in silver. So if and when we see gold above 2,100, you're going to see silver obviously really explode. Now, typically what happens is we tend to see gold make the breakout first. It's happened 3 or 4 times in the history. Gold makes a breakout first, and then silver after that makes its own breakout. And then that's when it really, really outperforms gold. And so we have a setup for that because gold is really, really close to making that breakout above 2,100. While at the same time, silver has really significant resistance at 27, 28. Whether you're looking at a quarterly chart or monthly chart, it's really stiff resistance there. So I think we have to see gold make that breakout first. And then at some point, I don't know if it's going to be a month later or 4 months later, at some point later, you'll see silver break back above that 27, 28, 29 area. And that's the point when silver should really outperform and really, I think, get into the 30s and get to 40 pretty quickly and probably back to 50 quickly. So given the goal targets of 3,000 and 4,000, I tend to think that if gold's able to get close to 3,000, silver's probably going to be pretty close to 50 at that point. So overall, you got to be careful. You don't want to be greedy, but silver really could be nuts over the coming years if we see this, if what I'm talking about is on point and proves to be correct.
Very interesting. As we're wrapping up, I wondered if you had any final thoughts that you wanted to share with our audience, or maybe let us know where we can find you if we want to learn more.
Oh, thank you so much for the opportunity. Well, you can just go to my website at thedailygold.com. I have a lot of free info there. I post interviews like these. I also have a YouTube channel, The Daily Gold. I do lots of interviews. I interview people myself. And yeah, I'll just say that like I said, nobody can see the future, but we're coming into a point in time where the setup is there. That's what people need to understand. The setup is there for this market, this sector, this industry to really go crazy on the upside over the next 2 or 3 years. And I can't tell you if the gold is going to break 2,100 tomorrow, or it's going to be 9 months or 6 months or 3 weeks or whatever. I can't tell you that. But, based on everything we're talking about, everything I'm looking at, the setup is there for this market to get really explosive to the upside over the next couple of years. And so, people should not be greedy, just use common sense and try and find, what I try to do is find the stocks which I think are going to be performing the best, because you don't want to be in stocks that are only going to go up, 2x or 3x if everything else goes up 10x. So like I said, you don't want to be greedy, you don't want to be reckless, but you do have to understand the setup is there for, I don't want to say life-changing because that's pretty extreme, but the setup is there for some potentially spectacular moves in these stocks, in these metals over the coming years.
Okay, I think that's a great place to wrap it up. Hopefully, everyone can keep their common sense as this continues. That's really hard to do, but we'll see. Thank you so much for coming on to talk about what's going on in gold and silver, and of course, the stocks.
Thank you so much for having me.
Of course. And once again, I'm Charlotte McLeod with the Investing News Network, and this is Jordan Roy-Byrne.